Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the markets, buy bulls showed up in a big way on Friday, and we ended up with a double bottom to the penny with a low of Thursday, 283.36, 283.37. As soon as the bulls held that level, it was a complete turnaround on the day, and the bulls took over, ending the week on a very strong note. So Apple, lead tech bull, is just raging to all-time highs. That's continuing to prop up the sector with strength, and we're looking at the potential for SPY to break this level of 286.01, give us the highest price we've seen in a long time, and give us that all-time high test. That would negate the potential head and shoulders pattern that we're keeping an eye out for. It is still a valid potential pattern, but the bears are pretty much going to have to show up Monday and Tuesday in order to knock the price back down to the 283 level at least and start heading back down to this right neckline. So if the bulls show up Monday, again, every single little bit of strength that we see by these bulls is only going to decrease the odds of this pattern and increase the odds of an all-time high. The weekly chart is still all bulls for the S&P 500, and we are looking strong. IWM is close to a bull break as well. We have this tightening pattern, and the range that we're watching is 165.15 to 168.71, and you can see we had the highest close in IWM that we've seen in the last month or so, and I've been highlighting how I'm watching IWM for any potential clues because it will be the first one to lose the weekly uptrend in this current setup. But obviously, we're not seeing that happen. And if we get this bull break, we're going to be looking for IWM to go back to all-time highs as well. That all-time high is 169.87. And here we are less than 1% away from that level. So bulls certainly still strong there. And QQQ also held a little bit of a double bottom, not with the low of Thursday, but with the low of Wednesday. This would be notable if the bulls can turn it around and break the lower highs. We've been seeing some daily lower highs over the past week and a half as we have consolidated. And if we get this base of support and then a break of the lower highs, a break of 180.99, we'll begin to shift that momentum back towards the bulls, and we'll watch this equilibrium to continue to tighten up. This would be our higher low at 178.12, and we're still watching our lower high at 182.63. So tightening range and a little bit of follow through, and we're going to have an even tighter range with a new daily higher low. Weekly chart, you can see this tightening range, upper wick, lower wick, now another upper wick, and now another lower wick. So tighter and tighter we go. VIX on the daily chart pulling back for the third day in a row. Again, the size of this bounce, we are looking for a daily higher low to form. So we're looking at support of 11.59 and a gap of 11.31, but we are likely going to see the support level found somewhere in this range, not really dependent on those previous support levels. So if we see a bullish candlestick sometime Monday or Tuesday, we're going to look for this range to tighten up as well as a potential equilibrium. Again, when you see a big bull move or a big bear move and we enter a price range that we haven't seen in a bit, then we look for an equilibrium to be established. And that's what we're currently going to keep an eye on for VIX. But if SPY does break that all-time high, we're going to be looking to head back down towards that $11 level. Pretty much the stronger SPY is, the more pullback we're going to see, and the more likely for an equilibrium. VIX on the weekly, again, rejecting from these moving average resistances. At this point, we're now on about 6 weeks in a row. There's a bunch of moving averages in here, but just the 50-week, we have rejected 6 weeks in a row. So unable to close over that blue line, keeping the bears in control of the volatility sector longer term at this point. Financial sector, bulls following through. Financial sector is more likely to still be a potential head and shoulders pattern just because comparative to SPY, you can see SPY is much closer to the top of the head, whereas XLF still has a ways to go. There's a gap to fill at 28.30, and after that, we're looking up at 28.56. So still a little bit of a ways to go, still a potential pattern to be watching, but same scenario where every bullish day that we have, every bull move we get further and further away from the neckline, the less likely that is to play out. Weekly time frame for XLF, very healthy little stutter step here and trying to see a higher low and quick continuation to affirm that this weekly trend has changed. We already broke the lower highs. Now we need the higher low and higher high to confirm it. That's what the bulls are going to be trying to pull off for the rest of August. So all in all, it is sunshine and rainbows for the bulls still. And until the bears prove us something significant, we haven't even lost the daily trend. Again, in all these videos that I keep talking about, Even if we lose the daily uptrend, the weekly trend is still nowhere near being lost, and we will anticipate a weekly higher low to form. So the bears can't even get step number 1, let alone step number 2 to change the longer term trend. So again, it's important that we stick to the charts and continue to follow those trends, which are all bull at this point. Have a good rest of your weekend. We'll see you soon.